Okay, here we go on a new section called 2-2, Reconciling a Bank Statement. Notice that I've given you some new vocab to look at, and I just want to start specifically with this one word, reconciliation or reconciling. Reconciling is using paper or electronic statements to verify the bank's records to make sure that no mistakes have been made. For example, you may use a check register someday, or you may use electronic statement looking online and just keeping track yourself, possibly on a spreadsheet, of what you've spent versus what's showing in your account on your statements or online. So it's your job to keep track if the balances aren't matching, meaning that you know some more things maybe should be coming out of your account, etc. And it's how we keep track to make sure there's no mistakes. For example, as I was keeping track of my checking account one time, I noticed that I was off by a small amount. And so I kept going back and forth and checking, and it turned out there was one charge that was showing up on the statement that I didn't have record of, and it was a Hulu account that I had canceled, and they ended up charging me one more month. So I was able to contact Hulu and get that charge reversed because I noticed it hadn't been canceled after all. So by keeping track of your accounts, you can make sure there's no erroneous charges that are going to be coming out mistakenly. So we are going to practice reconciling a bank account statement. So here we've got Michael's bank account. This is your check register or your record of what should be coming out, and this is what his bank statement shows. So let's look at what marks are on here. First of all, these 3 check marks were already in the image. They may be pretty light because it's kind of a small image there, but those were already existing. And what that means is those already came out last bank statement. So those 3 checks were already accounted for. Next, we have a new bank statement over here. So let's go look at these amounts and see what's going on. So first of all, we have this amount, for example, of $158.08. I need to go over here and put a check mark in that same column saying that it did come out on this statement. Same for the $74.64. Check, check. Same for the $46.50, check, check, and same for the $19.50, check, check. So I'm showing right here that those are the things that have come out. So what are these circled items in the withdrawals column? Those are the outstanding withdrawals. Money that I know is going to be coming out of my account but hasn't come out yet on the bank statement. So be careful, we know that money is spent. So the outstanding withdrawals that I'm noticing here are those circled amounts of $50, $18, $29.10, and $15. And so we can total up that amount here and see what those total outstanding withdrawals are. And then I'm going to go look at what the other 2 things are that are on here. And I'm noticing that there is a deposit of $35 on here, check, check, and a deposit of $100 on here, check, check. But there's this outstanding deposit of $125 that's showing on there. And I don't need to add that up because it's just the one number. So I've got this outstanding withdrawals amount and this outstanding deposit amount, and those are the 2 numbers that I need. So here I go. Go to the ending balance on the bank statement. Outstanding withdrawals are money that we know are going to be coming out, and outstanding deposits are money that we know is going to go in. Get a new total here. So I go on my calculator, 628.23 minus 112.10 plus 125, and I get 641.13. I compare that number to the bottom of my check register, and my accounting matches the bank statement now that it's been reconciled with the outstanding withdrawals and outstanding deposits. So my bank account balances.